All right, greetings, Jedi traders. David here of TradingFibs.com to bring you the technical momentum outlook for week 3 of 2017, starting January 16th with an open here on January 15th. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge of the market. See what's going through my head on any given week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, what a week it was. Week 2. Make sure you check out my week 2 recap, including day 5, where I do a daily video, a daily trend on every day's market, including the pre-market trend in the morning, looking at the current trend on the HA bars, Heiken Ashi bars, in together connection with the something I've been watching for some time now, the Murray math charts. But again, that gives me a kind of a roadmap of where price action is holding. But it's all about the candles. So week 2, thinking that we might go ring that YM bell up there at 20K. Well, that just obviously didn't happen. I didn't say I had all the answers. Volume got a nice spike this week, but really kind of low key here as week 2 rolled out. Multiple Fed speakers and not much else happening in the market. So here we go, week 3. So let's go ahead. Let's jump into the charts as we do each day and each week. Let's take a look at where we are currently as far as daily gaps are concerned. You can see we've consolidated for most of this half of December and for the most part here of January so far, trying to get that 20K bell up there. A lot of sideways action, but when it comes to open gaps, I take those pretty seriously, meaning that at some point with 100, that's right, I'm stating that right here today, 100, well, I've always said that, but 100% guarantee, Jedi traders, we coming down at some point, whether it's next week, 2 weeks, a month, a year, we'll be ringing those bells downside all the way down to 15,924, and believe it or not, that's not such a bad drop there on the YM. If we're going to have a correction, close those open gaps out and then get a lift back upside. So that's where we sit on the YM. Nothing really, the nearest open gap right now down at 18,929. So given any level that I show you here today, once the momentum has shifted downside, I will make that pretty clear in the weeks to come or the months or years to come that we're headed towards that level. So not to say take a short right now and we're headed down there. I'm just saying level of interest, market on the charts. All right, let's take a look at the NQ as the NQ just continues. Relentless push upwards, pushing above the 5K. That's right, we hit that there in week 1. Week 2, you could see NQ really was the leading index. I have no open gaps as we're at all-time high, so I got to scrunch it up here and say, oh, there they are, 46.10, 75, 44, 61, 25, all the way down to 40, 17. I got nothing below that. So, yeah, that's right, about 1,000-point drop there on the NQ eventually to reset, and hopefully times won't be that bad that we'll get ourselves up higher again. All right, daily ES, again, a lot of consolidation here. We got some levels downside, 2197.25. Lowest level there on the charts, 1860.75. So still a lot of sideways action. Markets turn around. I'm looking at 97.25 to be in that first level of support there. If we break that, obviously, we'll be headed downwards. Hey, guys, for good measures, let's throw in the crude here as price action trying to get that 55.41. I got to tell you, months back, I don't have the time frame up right now, but this is about September. I've been writing about crude heading up to that 55.41. I know we're not there yet, but that's an open gap. Do we have open gaps above that? Sure, we do. As price action in the markets, you know where crude was up around the 80s and the hundreds. So eventually we'll close out that 55.41. No open gaps to speak of, but yeah, there are some open gaps downside on crude at some point. I fear that crude might actually come down back to those numbers, but right now we continue to hold for the most part November, December, and we had these support levels. So yeah, crude at some point come down to 43. All right, let's jump into the big picture. So we'll do this week a momentum outlook on the 3 major indices, and in the weeks to come, what we'll do is I will throw in I will be building up some charts here on the Murray Math charts of the as we do each day in the daily trend, we'll be looking at not only crude, but we're looking at gold. We'll look at the 6J, the yen, and the euro as I build these charts up. So for today, let's stick to the three indices, see where we're at, and then roll into week 3 as we get going here in a couple hours. All right, here we are. So what we're looking at here, daily, 4-hour, and 60-minute chart. And what I have here laid down is Murray Math levels. Again, the key levels that I'm looking at are pointed there with the arrows. The first big picture I want to see is I always like looking at the bigger picture and saying, all right, here on the daily, where we sit it, or where are we? And right now we can see that resistance is obviously an upper level. So price action had some challenge here to break above that for 3 days this week and finally got a breakthrough above 50.39. So 50.39 was the level I was watching on the charts all week. So rolling into week 3, I'll be looking at 50.78 upside if this market is going to roll up. If not, I'll look back down here as we sit at 50.60 here on Sunday over the weekend, and I'll be looking at 50.39 once again downside for some support, and then rolling all the way back down to 5K. Now with a daily graph here, obviously there are going to be levels in between, so we jump over to the 4-hour and see if there's any congruity here. Are there any levels that are the same, or are they numbers that line up but they are at different Murray Math levels here? So again, the purpose of going over these charts is not to teach in any way the Murray Math strategy. You can use Fibonacci retracements. You can use these Murray Maths. You can use whatever study you're using. I'm finding that over the course of the months here, as I watch these, price action is holding to these levels as price action moves throughout the day. Again, it's not an entry-exit position or setup, but more obviously, like I watch on any given day, a daily pivot, a fib target, a 25-minute open range high, etc., etc. These, to me, fall in the same family of support and resistance. All right, so looking at the 4-hour chart, we're looking up here at overbought 50.78, which lines up over here with the daily. So congruency there on the 4-hour chart, 50.39 downside. So we pretty much have the similar numbers here. So no difference between 4-hour. Again, when everything lines up, that even makes a stronger resistance, stronger support that price action will hold at those levels. All right, now we jump into the 4-hour chart and we see, all right, we got a little bit of a different picture as 50.78 now is resistance as we don't see it over here. 50.78 is the resistance here. So to me, 50.78 is going to be a hard line in the sand. Again, we could push up to 50.97 all the way up to 50.17 here on the hourly. Hourly levels will change as price action moves forward, whereas the 4-hour and the daily won't change as quickly. So we want to watch for 50.78 definitely for the week to come, and 50.97 and 50.17 upside. The case for the downside, again, we want to look back down all the way to 5K. So if price action pulls back to 50.39, again, a level of support here, major pivot on the 60-minute chart, all the way down to 5,000, which would be major support on the hourly. Resistance here could be a significant level of support as well. Anything to the downside, we could reassess during the week. Now, let's jump over to what I like to look at every day. The 100-tick chart, as we see price action is holding above the cloud, the 51.44, which I put a lot of credence into as a key moving average that if price action is above and the 51.44 is above, we have ourselves a long trend. As we can see here, price action is lifted after some, and what I have here is, by the way, 2 Murray Math MML levels drawn like a fib upon a fib. So here it is, 2 MML charts on 2 different time frames. You can see the consolidation here in between the 2 time frames. We have the smaller time frame here. So let's go ahead. You can see that here from over here to here, and then we have the resistance from here to here. So we got 2 levels going on here. A lot of resistance this last week as price action finally lifted. So we got 58.78, 50.17, which happened to line up with the hourly. So again, I'm looking at those levels upside as resistance as we move up, and support back to the downside. I'll be looking at 50.39, 50.19, and 5K. If we break the 5K, again, I'll be starting to look to daily 50 MA. I'll be looking down to 49.21, but that would be the next level down, and obviously downwards from there. We'll reassess those during the week. All right, let's jump into the YM daily 4 hour and 60 minutes. Seeing the resistance up here, I'm thinking at some point we'll get that 20K bell. I'm not sure we're there yet. 19. This could be the week, but we'll have to see how volume gets us there. 19,688 is downside. So where does that line up? We got our daily 50 MA also here, 19,688. So first to the upside, let's make the case to the upside. 220,000 up here again, pushing above the 4 hour and the 60 minutes. So I got to deal with some levels before there. So I'm looking at 844 on both charts here. 844, I'm looking at 863, but I'm really looking at top number up here, 883. We break that 883, then I can start to look at that 20K again on the futures. To make the case for the downside, again, look for 688, which would put us down at the support on the hourly as well as the 4 hour chart. But before we get there, we might just happen to get a stall here at 766. So watch for 766 downside. Now, let's jump into the core chart here on a 75 tick chart. As we can see this week, really December, as we saw here on the daily gap on the YM, if you remember, a lot of consolidation sideways. Well, we could obviously see that here on the tick chart as price action just waffling back and forth, very range bound. These upper levels, 844, 863, 883, 902, very similar across the board. Still trying to get up to that 20K. So we got a lot of resistance here ever since the middle of the, December here. So to make the case that we're going to break upside, we got to break these levels of resistance. So watch those intraday. Downside, again, I'll be looking at 688, as I just mentioned, with a stop here at 766. All right, let's wrap it up with the ES here as daily 4 hour, 60 minute, looking upside to 81.25. Anything above that, we'll be pushing 312.50. But right now, 81.25 is the number to look at as we've taken a stall here at 22.73. Yes, we hit that on Friday, 22.73. Wasn't able to push above that, 22.73. We have 22.71, so pretty close on the 60 minute and the 4 hour chart. To make the case to the downside, I'll be looking at 22.50. Where does that line up? Well, we got 22.50, bigger range. Got the 50 SMA downstairs, but there's that 22.50 on the 4 hour, a major support, resistance, and support down here. So before we get down to 22.50, I will be looking at 22.5781 if we break. But right now, current trend upside is the 50 holding above the 144, 50 holding above 144. So trend still playing to the upside, which could easily change in 1 to 2 days. Let's go ahead and look at the tick chart here as the core set up here on a 75 tick chart. Similar picture, 22.73 was the resistance here ever since the middle of December. Kind of a common thread here. Price action pulled back, found support, back upside, and here we are once again fighting it. So again, looking back downside 57, there's that 22.50. If we break that, we'll be looking downside, and again, 22.18 also a level to watch, but we'll reassess that during the week. We could see the 51.44. So once again, there it is, ES, all the way down to 22.50, but we'll be looking at 22.57, which would be right up in here. And then we come back and we got ourselves all the way down to 22.50. Anything lower, we got 22.18 here. And we said, what? Yep, there's 22.18 down here on the 75 tick chart. So obviously that would be a level to watch as price action moves down. All right, taking a look at the economic calendar as we roll into week 3 here. Again, Monday, short session, pretty much quiet session. Tuesday, as we roll in, multiple Fed speakers throughout the week. Watch for Yellen to always move those algo charts. Here we are, jobless claims on Thursday, and we roll out the week Friday, inauguration. And really, as we roll into maybe the last week of January here, see where the economic policies are leading. That might eventually move the markets at that point. Please make sure you check out my pre-market trends every day for any change in the Globex charts. Check out the intraday trends and the daily trend recaps here as I post each day where the powerful trends were for the day. And actually, before we wrap up here, I wanted to go back and show you that whether you're looking at the longer term picks, especially if you're looking for ETF setups, or if you're looking for the intraday setups, you can easily take an ES, drop it down to a smaller time frame. Again, use the MML charts as support resistance levels, but what it takes, the key is what does it take to remain in the trend? HA bars, Heikin-Ashi bars, there's a 5144 off a minute chart. Here we had a 5144 off a larger time frame, but here we go, 5144 off a minute chart. Shows that price action holding upside. Why bail? Just hold on to the setup, break above the cloud as we do each day, looking for setups like this with a setup with a 534 in sync. That is a high probability setup. Whether you exited here or not, that's up to your trading strategy. But great place to either take a contract off, manage breaking the cloud. You could have exited a variety of different ways. But again, that's how you interweave the intraday pick with the bigger picture. All right, so there's our daily pick and our technical momentum outlook. And there it is, Google Home agreeing with me in the background. All right, that concludes an insight into the technical momentum outlook for the indices. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs. As always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and as always, leave your bias at the door when trading. Hey guys, for those of you that are interested in joining us in a community of like-minded traders seeking these highest probability setups, feel free to email me, David, at TradingFibs, TradingFibz.com. You may join us on any Thursday or Friday combo to view the live charts as they set up and happen in any trading day. Hey guys, have yourselves a Blue Zone week number 3. Wherever you may be, good day, good night, and good trading to ya.